Hey everyone. In my opinion, NIO has had an excellent year in 2023 with all things considered. The EV market was in a difficult position in 2023, and with the competition rising, prices coming down, interest rates being higher, and the slower economic recovery in China, I think NIO has had a really good year. Still, NIO's stock is 87.5% down off its high it was reached in 2021. Now, understandably, investor enthusiasm in EV stocks is nowhere near as high as it was in 2021, but offsetting that is the better performance from NIO as a company, right? Not just with hype. So in this video, I'm going to look at NIO's prospects and answer if I think NIO stock is a buy for 2024. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I mentioned that NIO has had a relatively strong year in 2023. You can see the delivery numbers rising nicely in 2023, especially in the most recent quarter. The company delivered 55,432 vehicles. That was up from 31,607 vehicles in the same period the prior year. Also, the company delivered a vehicle margin of 11% in the third quarter of 2023. That was impressive, and management is saying that in the fourth quarter, the profit margin, the vehicle profit margin, could be in the mid double digits, so moving higher from here. All things considered, this was excellent growth from NIO in an otherwise difficult year for EVs. A new question mark arose on December 5th when NIO announced that the company entered into an agreement to acquire JAC, which is its manufacturing of equipment and asset company, right? NIO formerly chose the outsourcing business model where it didn't own the manufacturing of vehicles. It outsourced it to JAC, and now it's buying that company and it's bringing manufacturing in-house. So this could have positive implications for NIO's profitability because it should cost the company less when it's producing the vehicles in-house. That is only if it's utilizing the capacity, right? If it has capacity to produce 150,000 vehicles for a year and it produces 150,000 vehicles, then that would improve profitability significantly. However, if this acquisition means it's going to have capacity to produce 250,000 vehicles for a year and it only produces 150,000, that could have a detrimental impact on profit margin as it's not a large enough scale of production to utilize the greater manufacturing capacity which it still has to pay for. So this move is a big question mark in my opinion. It could be really, really good, or it could also be bad. And so we don't know yet. I don't have information yet on how this is going to work out. This is brand new. This just came out when the company announced its earnings in the latest quarterly update. Up until that point, the company was choosing that outsourcing business model. And so this is a big shift for NIO in terms of changing the business model mid-tier, right? Mid-expansion. Now, I will say the company does have nice scale already at over 100,000 units delivered. So it might be a reasonable time to consider bringing manufacturing in-house. Although it's just remains to be seen yet. We just don't know. We don't have enough information to make any conclusion. Anything I say would be speculation after what I've just said already. So NIO management said that they have 45% market share in the market for RMB 300,000 and above priced electric vehicles. That's a strong position. And in September, they launched an all-new EC6, a mid-sized coupe SUV. And that's going to join the other models that NIO launched between the second and third quarter. So NIO launched about 5 or 6 models, correct me if I'm wrong, so far in 2023, brand new models. And so that's increasing demand, and management said that they're going to see the benefits right here. It says NIO's second generation products will be fully unleashed next year. So investors will see the benefits fully next year, right? The fourth quarter, Production deliveries between 47 and 49,000, about 48,000 for the fourth quarter. So they're not going to see the full benefits yet in the fourth quarter. That's to come in 2024. So that could be exciting news for NEO stock investors. But let's look at the company's prospects longer term. So here's NEO's quarterly revenue over the last several years going back to 2019. And you could see how it has grown nicely over the years with some slowdowns, and then it bounces back up as it revamps and increases and updates models. 2.6 billion in the most recent quarter. Management saying 2024 they're going to get unleashing of that demand for their next gen products. They've also recently increased their sales force to help support sales of these new models. So sales are likely to expand for NEO in 2024. Net income is another story. Trailing 12-month net income negative 3 billion for NEO. Although now that the vehicle margin hit double digits in the third quarter, 11%, and in the fourth quarter is expected to be even higher double-digit percentage, the net profit margin could start to turn upward. Additionally, NEO said that it's no longer offering the free battery swap service with vehicle purchases. So that's going to lower its cost of goods as it sells more cars. So another positive for NEO's profitability. On the negative side, I mentioned it did just hire significantly more salespeople. And if it has those salespeople on salary instead of commission, then that could be a negative on NEO's profitability next year unless those salespeople really help to boost sales in excess of what it costs NEO to pay them. So that remains to be seen. Investors really want to see progress from NEO in the profitability front. So far, it's been just going in the wrong direction. Even though delivery revenue and all that advancements in technology have been improving, investors do want to see some progress on profitability from NEO. Another thing I like to look at is total long-term assets, and NEO has 5.729 billion in total long-term assets. All else equal, I like companies to deliver more revenue and more profitability on a smaller base of assets, and this is only going to be larger now that NEO brought the manufacturing in-house. So it's now going to have a larger asset base because it's now owning the manufacturing business, whereas previously it was outsourcing the manufacturing, if that makes sense, right? It was paying someone else to manufacture the vehicles, and that was a variable cost. It only paid what it produced. Now it has to pay regardless of the production. It needs to pay. And so now it's a fixed cost, it's in-house. That's going to increase risk, but it also increases the upside, because if things go well, the upside is much higher when you own the manufacturing because you leverage that fixed cost base. Your cost stays the same while your revenue increases, and that creates leverage, and that creates more profitability on the bottom line. And finally, I wanted to look at valuation. NEO is trading at a forward price to sales of 1.221, and I've brought Rivian and Lucid in here for comparison. Lucid is trading at a forward price to sales of 8.56, Rivian at a forward price to sales of 3.4. These are primarily US-based auto companies. Lucid, you can say, is more international than Rivian. Its main backers are the Saudi Arabian government. Still, these are significantly more expensive than NEO, right? Rivian is more than 3 times, well, I should say roughly 3 times as expensive, and Lucid is about 8 times as expensive as NEO. So relatively speaking, the valuation is cheap looking at its competitors. So to answer if I think NEO stock is a buy for 2024, it's close, but I'm going to say no, not yet. I want to see the impacts of this acquisition of bringing manufacturing in-house. I also want to see NEO deliver the increase in vehicle margin in the fourth quarter. And I want to see some better forecasts, some better outlooks for the EV industry overall in 2024 before I can recommend NEO stock as a buy. But I wouldn't be surprised if NEO is one of those stocks, like a few others that I don't have recommended as a buy going into the year, But in the first or second quarter, I upgrade them to a buy if they make the progress that it looks like they're going to make. If they make that progress, if they make that leap forward, I wouldn't be surprised if I upgrade it to a buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.